right, good afternoon, everybody. Welcome back to Trader Minute. This is Josh, and glad to have everyone on. So, today, Tuesday, I want to talk a little bit about the couple of the banks that have announced it today, a couple of the bigger ones, as you're already aware of, should be at least. JP Morgan and Wells Fargo both made their announcements today. So, those of you who have not seen it, I'm going to just skim over it. Just double checking recording's working. It's good. Just gonna scan over that and look at it. There's gonna be some neat stuff I want to show you today. Uh, you know, big earnings season or height of the earnings season starting this week with a lot of the major banks coming and announcing. Again, we already emphasized the fact that JP Morgan, Wells Fargo today. Tomorrow you've got Bank of America. You've got Schwab coming in as well. Not on that list, but it will be there. Thursday you can see you got American Express, Citigroup, even Capital One's there. Goldman Sachs, nice one to watch. And then Friday you've got Morgan Stanley, Bank of New York Mellon. So just a really heavy announcement week for the financials as a whole. So again, I like to bring that up and mention it because I'm going to show you something that's really cool to look at. That gives you an idea is the seasonality of the banks and the financial markets, whether it be the bigger banks or the regional ones. Okay, so looking at, let's just go to the news here. Looking at some of the things they talk about, both JP Morgan and Wells Fargo are both sitting kind of about flat, slightly up actually, and their earnings came in. Well, Wells Fargo hit on both of theirs. I keep saying Morgan Stanley. JP Morgan is at their fell a little bit short on the EPSs, but the revenues were good. Let's just look at a couple of things that they commented in here that I find very interesting as I'm looking long term into this sector and industry. So Wells Fargo tops Q4 2 cents. Charge-offs fell 1.1. That to me is one of those big things. You can see there net charge-offs of 963 million down from 1.1 billion fourth quarter of 2012. Okay, so think about that for a minute. Obviously it's a lot of money to begin with, but in the sense of you and me, in the sense of a consumer, in the sense of us going out there and just, so to speak, living life, getting back to normality for us. It's easier to lend out. It's easier to get a car loan, to get a mortgage. You're seeing the housing industry start to turn around. So you can see the impact that this can have on everything, really. From commercial properties to individual housing properties, just the growth of the economy and the market. So yes, there's still write-offs, but it just, to me, those write-offs and charge-offs are showing a sign that us as a consumer, we got to put a little bit of responsibility on ourselves, I think, here. Us as a consumer are starting to become a little bit more cautious ourselves for our own investments. Okay, we're not going to jump into a house if we think we're going to lose our job next week, next month, next year. We're going to be a little bit more careful. We're going to be a little bit more responsible with the investments and the loans that we are going to take on. And I think that's a lot of times unforeseen kind of in the background. And I think that's a good deal for the overall economy, which really helps the banks out as well too. So some of you say, well, that's still a lot of money. They deserve it. They give us bad loans, whatever you want to say. But we got to throw a little bit of back on ourselves. Say, hey, as ourselves, as our neighbors, are we responsible enough to cover these new debts that we're taking upon ourselves? And to me, that's a big deal. You'll learn in the coming weeks and months that I like talking about me. I like talking about us and taking responsibility and putting a little bit of the weight on our own shoulders, from our own investments to our own savings to anything related to life. Okay, I think we point the finger too many times at mom, dad, neighbors, friends, bosses, etc. And so, anyways, that's kind of sidetrack for you. But I like looking at that number. Okay, 600 million reserves. Da da da. Wells Fargo, another outstanding year. Okay, so this is the CEO talking here, including strong growth in loans and deposits. Okay, double-digit growth in earnings. Okay, so again, keyword there, loans and deposits. Okay, people are starting to have faith a little bit more in the banks. They're starting to put their money back into it. You know, even despite the measly return on their investments, they're feeling safe about that again. Okay, so that bodes well for Wells Fargo. Again, up today, and I don't know why they announced it twice, but they did. So JP Morgan, EPS of 140, revenues up 5%. A couple things that have been kind of hampering them, as you're already aware of. Oops, too much highlights. Is CEO there talked about some of the regulations that they had to take care of, the resolutions. Okay, one of the more popular ones is the Madoff thing. He says there it was in our best interest of our company and shareholders for us to accept responsibility, resolve these issues, and move forward. Okay, I like that. Again, as a person, I like people taking a little bit of responsibility there, and doing what they need to do is best for the consumer, and eventually leads on to focusing on us, our clients and our customers from there. Okay, so a couple basic things just to look at into the earnings announcements there. All right, what I want to look at now is, let's go to a chart here, and I want to talk about this thing called seasonality. And really, nobody ever looks at this. I'm sure we think about it as a consumer, as just a day-to-day thoughts in our mind. I know I've always thought about it. I always look at the end of the year. Oh, it's Black Friday, retails are going to do well, right? And it's a seasonal thing. You hear about these cyclical stocks and cyclical companies, and when it's really cold, the utilities do well. And so there's a lot of ways to look at the seasonality of sector groups or industries, and I'm going to really focus today on the financials one, just because I find it interesting to see when the busy season of banks are, finances. And I think a lot of people overlook that. So I'm going to go to a free chart here, and we're going to go down to the bottom here, and there's this seasonality charts here. And let's pull up the Dow Jones US BK for banks. Okay, Dow Jones US Bank Index. I'm going to hit go here, and there's going to be a couple changes I like to make here. First is it going to compare it to the S&P 500. I don't want to do that. Just gives you some numbers. Oh, I got to have my dollar sign. Where did that go? Sorry. Dollar sign. And it comes up with some mumbo jumbo here. I like to change it to this histogram. There's a couple three buttons there. Changing it to the histogram gives you these bars here. And it's always going to start you out with like this 5-year thing. And 5 years, I mean, think about it. Not too much happens in the grand scheme of things over 5 years. We have the debacle that we happened in '08 and stuff like that. And so the longer term you can get on this, the more accurate the reading is for you. And so I like things that have a history. Okay, for whatever reason, technology is not going to be as good at doing this as the financials will or retail. And so I can scroll this all the way out to 15 years. So this is going to give me a nice 15-year scan from 2000 to 2014 for us in the financial sector, or in this case, the banks. A couple things I just want to look at here. Okay, first of all, January, the two numbers we have is a top number and a bottom number. And top number 57, let's just look at January, the month we're in. Top number is telling you the percentage of times that this sector or cyclical area or whatever you're looking at has been positive or up. Okay, so 50% of the time this sector is up in the month of January. But notice, that being said, that there's an average loss of 1.1% for those stocks in that sector. Okay, so 1.1, a loss, an average loss of the banks, the major banks in that sector in the month of January, even though as a whole the Dow Jones banking sector has been up. Leading that into February, which we're about to get into, the numbers way down where it actually loses quite often. Hey, now this is not a throw out that hey, it's going to go sour or it's going to go bad, but historically speaking, February is not the best time to be in the bigger banks, the bigger financial institutions as a whole. Just finance just tends to not do as well. Now, a lot of that can be because of maybe the earnings that came through the month before, okay, in January. Okay, you throw that in as a case, well, okay, then that would make sense that maybe, April might not be as good because of announcements there, or July. Well, July is actually really good. December is really the best time to be in the financials over this last 15-year period. So this is just showing you just the trend, the overall trend and the seasonality of how money tends to be moving in and out of that sector, and just something to look at. Okay, something to watch, that maybe February might not necessarily be the best time to be in the financial sector, but maybe prepare yourself to really what might be coming leading into the spring months there. Okay, I like this sector. I like this industry. I like it long term. I like it leading into the next few months, but I tend to want to stay a little bit more on the sidelines coming into February. Okay, and so just something to watch and look at there. Let's go to XLF here. All right, so here's the financial sectors, SPD, Spider, and whoops, come on. And notice the uptrend we're having, a couple levels of resistance and support on this climb. Had a couple flag pattern breakout of these uptrends. And one level I want to pay attention to is one that's already at 2175. Okay, relatively good support level for the last breakout that we've had. The bigger breakout was really right around the 20, I'd say 21, well, 21 and a half. Okay, where it came and tested that for a few days there. Was resistance back there in November, December, broke out here through end of December, and kind of create some new highs and a new support level. So that's kind of the level that you want to be paying attention to really start to say that this is turning and consolidating and it could continue to be on a bearish run. I need to see a breakthrough, some serious support of 2150, and ultimately probably down around 21 and a half is another level. Let's extend that out, that I see as an area of support, which eventually, if it falls and breaks, then we're looking a different way. But this is what it's been doing the last day or two, is really what I like to see as far as a consolidation for a potential buyback into something relating to that industry. And so that's just something to be aware of. And you'll see this across the board, really, any stock or sector that you're looking at. We're looking for these support levels. We're looking for the resistance levels. We're looking for the re-entries. And we're looking at the bigger picture. And with just starting in the earnings season and earnings anticipating to probably be good or better than expected, I find it hard to see just yet that things are starting to turn around. And so overall bullish, but that being said, keep an eye on the seasonality of it. History has a lot to do with it. And so that just causes us to look at that and say, okay, it's on the radar, it's in our mind, and we'll pay attention to it. Another good regional measurement is going to be your regional banks. CRE. Okay, the regional bank spider. Okay, again at some right now at a serious support level. I'm on annotate 40 there. Okay, it's testing that, it's holding that. Okay, in these regional banks, I think if you start to see them start to slip and slide a little bit, I think that will slowly lead into the bigger ones. And so this to me is one of those ones that tends to be leading it a little bit earlier, and kind of watch where this goes. Quite a ways from it. The major one's going to be somewhere around 39, 38 and a half. But it would need to break down through this first before I start to say, okay, this is not going the way I'm looking for. Let's go another direction now. Okay. And that's what I wanted to show you. So keep an eye on that seasonality. Go play with it. See if that's something that might help you in your different sectors or industry groups, depending on what it is that you're looking into. But I've always liked the seasonality, especially in retail. We could look at that another time too. But I wanted to focus it on the financials since that's what we're in the heart of right now with earnings. And and again, I'm still very bullish on that sector as a whole. I'm just going to pick and choose my entry points based upon what history has shown me. And I'm anxious to get back into it. Really, for me, more into the end of February, leading into March and so on. Okay. All right. Thanks for being on. Have a great afternoon. We'll be on live chat with you throughout the day, and Carl should be on here soon for his top three as well. And if any changes come up, we'll get on and let you know. Have a good day.